Good morning, everyone. Today we're going to be talking about how much it will cost you to sell your house, whether it's an investment property or your primary residence. There's costs associated to selling, which not everybody is aware of. So that's what we're going to go through today. Last time we spoke about the buyer's closing costs or cost to purchase a home, and now we're going to talk about the seller side. This form that we're going to walk you through is called the seller's estimated net proceeds. And it should give you a pretty good estimate if you utilize your home as an example of how much it'll cost you to sell. A lot of the items, and I'll mention them, are negotiable. So sometimes there will be a cost to the buyer, sometimes there'll be a cost to the seller, and sometimes there won't be a cost. So I'll walk you through that. In addition, please have your realtor help you with this when you're trying to sell your home. The main purpose of this video is because a lot of flippers, a lot of homeowners get excited to sell their home. They think they could sell it for $100,000 and they owe 50 on it, and they think that their net proceeds is going to be about $50,000. Well, after we review this, you'll realize that that's quite skewed, and it's not actually um, you know that much of the proceeds that go to the seller themselves. Alrighty, now down to it. This sheet that's provided by the Texas Realtors Association, um, lets you fill out the seller, the address, and one very important item is the anticipated close date, because this will affect how much taxes or how much other fees you'll end up paying depending on when you close. That's why it's quite important to estimate how and when you're going to close, whether it be in a month, whether it be in 60 days. What I've seen usually lately with appraisals being delayed so much, it'll usually take anywhere between 35 and 45 days. And the biggest factor in that is how soon the buyer orders the appraisal. But anyway, I put an estimated close date of October 27th. Not really realistic since we're on October 6th today, but just for the sake of this example. Estimated annual property taxes. Go to your county website and get how much taxes are the year that you're trying to sell. So for this property, this sample that I used, I went ahead and used 2021 taxes, because those are the taxes that are going to be paid at closing. You're not going to pay 2022 taxes. You're not going to pay 2020 taxes. Those have already been paid, hopefully. You want to look at the current year. Now, the anticipated financing, usually most loans are conventional nowadays. There are VA and FHA loans. It doesn't really affect the seller that much. The only thing it affects the seller is that certain loans allow the sellers to contribute a larger percentage towards the buyer's closing cost. And we'll talk a little bit more about that later on. But this doesn't really matter, and it'll be hard for you to guess which loan the buyer's going to use. So for this occasion, I went ahead and assumed conventional. Now we're going to look at the left side of the screen, estimated costs. A lot of the smaller fees, they're just title, recording, miscellaneous fees. I'm not going to really walk through those. I'm going to go through the main larger amounts that can affect your pocket in a greater scale. The most important one, and the one that most people ask, is the broker's fees. On average, yes, brokers charge about 6%. Why is that? Usually 3% goes to the buyer's agent and 3% goes to the listing agent. Now, that doesn't mean they can't charge 4, 5, 7, 8%. A lot of realtors that have a big marketing spend and will really focus on marketing your home, they do charge a higher percentage. The good thing is it doesn't get paid until it closes. So you're not paying it necessarily upfront. You're paying it out of the cash that you will be receiving at the closing table. The other expense, escrow fee, I've seen it gone up a little bit. It used to be $350. Now I've seen some title companies charge $400. This is per side. So you as a seller have a $350 to $400 expense. The buyer also has a $350 or $400 expense. Prorations. This is what I was talking about with the taxes. Any taxes due for the year In this calculation, it's taking October 27th. So you'll be paying the taxes from January 1st, 2021 through October 27th, 2021. And this form actually did it for me automatically. So this isn't really, yeah.
Hey, Rafa, what if I have the taxes in my escrow account already and I already have that amount? What would happen there?
Correct. We'll talk about that at the end. If you look at the right side, there's an estimated escrow balance. That will be refunded to you by the bank, but it will be refunded after closing, maybe a week or two, depending on how fast or slow your bank works. But that's a great question, Israel. So anyway, these are the taxes that are going to be deducted at in your closing statement when you're about to close. Some other items are interest, which shouldn't be a ton if you're current with your payments. Although I will say I did have a case literally last week where the current interest due on a home loan was about $30,000. I thought it was a prepayment penalty, which most conventional banks do not have. And what it actually was, it was interest accrued throughout the time that they asked for the COVID relief fund. So they didn't pay the principal and interest for X amount of months. And now that they're selling their home, that interest is being charged to them upfront. So if you don't have a need to ask for assistance from your bank, don't do it. It'll probably end up costing you more down the road. Obviously, if you need the help, consider the options and take it. But rule of thumb, if you don't need it, don't use it. Okay, repairs required by buyer. I left this blank because this is very hard to estimate. Sometimes the buyer will require you to actually repair something, and sometimes they will just ask for a credit, either to the price or to their closing costs. It's usually better to deduct the price. That way it's easier for you. At the end of the day, you're gonna net the same amount, but it'll be easier. You don't have to worry if the repairs were done properly or not. And in addition to that, your fees are, just lower in general. Repairs required by lenders. Sometimes VA and FHA loans do require you to do the actual repairs. It's hard to estimate those, and they're not very common unless your house is in really bad shape. So I would say I wouldn't worry about this until you get down to the negotiation table. The purpose of this video is mostly for you to estimate how much it's going to cost you to sell. Residential service contract. In a normal market, right now we're in a seller's market. In a normal market, usually on a full price offer, the buyer will request the seller to buy them a home warranty, which covers the appliances, mostly the appliances for the most part, and it's between $400 and $600, at least here in Texas. In this market, you don't get that asked a lot by the seller, but nonetheless, if it's still a good deal and your buyer wants it, it's your choice. It's negotiable whether you want to allow it or not. Maybe you offer the home warranty instead of fixing something else. Seller allowances. Going back to it being a seller's market, these aren't being asked a lot these days, but nonetheless, they can still ask for them. If you have a lot of offers, maybe what I would do, and you still want to help the buyer with their closing costs, maybe increase the price by the $4,000 they're requesting, and then give it to them as an allowance. That way, their closing costs or their cash to close is a lot less. It would really help the buyer out. Now, keep in mind that if you increase the price by $4,000 and there's a loan, the appraisal has to hit the higher price. So keep that in mind. Going back to the repairs, if you lower the price, your appraisal no longer has to hit such a high number. So just keep that in mind in this market where prices are really, really increasing and they're pushing the bar every time. Survey fee, you should have received a survey when you purchased the home. If you did, you can use that same service and you'll eliminate this $350 cost. But and it's also negotiable. If you don't have a survey, you can ask the buyer to pay for their own survey, but usually the seller pays for their survey. Another big fee, title policy. I usually go to sierratitle.com. It's a title company here in Texas. I input there's rates and taxes. I input the amount of the sales price, and it'll give me the fee for the title policy. From my understanding, those fees are set by the state, so you can't really shop around for them. It's different than the escrow fee, so you can't really shop around for them. So for the purposes of this conversation, I would just go to sierratitle.com, get the value of it, and then input it here. Now, keep in mind, title policy, usually seller pays for it. Depending on the negotiations, depending on the price, depending on what you want to get out of it, you can ask the buyer to pay for their own title policy. But in this example, I'm assuming the seller will pay for it. And I just put a $250 miscellaneous fee just because there's always going to be extra, $50 here, $70 there that the title company will charge you. And I just assumed this was the case. Any questions so far, Israel?
No, I'm following so far.
So if you take all of this into account, keeping in mind that the broker's fees and the taxes are the highest amounts, your cost to sell your house, your $200,000 house, will be close to $23,000. Now, granted, the taxes, they're not really a cost to sell the home, again, because as Israel mentioned, you have your escrow account that will be refunded to you. But nonetheless, it's costing you close to 10% to sell your home. And this is with the seller asking for $4,000 in seller and buyers. I'm sorry, the buyer asking for $4,000 in seller contribution. They can't ask for more, they can't ask for less. But, average, 10%. I used to say 11%. In this market, you could probably get away with 9% as far as closing cost fees. Now, we're looking at the estimated proceeds. Sales price, $200,000. Estimated cost, which we got from over here, there's $23,000. And you have a loan. So, go to your bank, bank statements, check how much of a principal balance you still have. Keep in mind, your final payment will probably be a little bit higher because of the interest that's accrued on a daily basis. But in general, you can get your principal balance as your assumed payoff amount, and then you get your net proceeds. So really, when you maybe thought $75,000 was going to be your payday, it's looking closer to $50,000. And that's assuming you don't have any other liens on the property. Now, after closing, you probably have unused insurance because it's being paid upfront. It's being paid for the full year for the first 12 months. So if you didn't own the home for the full 12 months, that's your scenario. You'll get a little bit of money back. But the big chunk of change you'll receive back is your escrow balance, which a lot of times it does include insurance, but mostly taxes. So if you've already paid your $4,400 due of taxes into your escrow account, that should be refunded to you by your bank within 5 to 10 business days or whatnot. So you get your net proceeds, you get your estimated refunds, and that'll be your paycheck at the end of the day. Now, remember, if it's your homestead and you've lived in it for at least 2 out of the last 5 years, there shouldn't be any capital tax gains. If you've owned it for more than 1 year, you should probably look at long-term tax gains, less than a year, short-term tax gains. Just check with your accountant, your CPA, to make sure you're in good standing with that and you're comfortable with it. But this will give you a better idea. Doing this exercise with your home will give you a better idea of how much you're netting. So if you're trying to buy a house to flip, or you're selling your own home and want to get an idea of how much it'll cost you, this is a great exercise. Your realtor should be able to help you with this. And if your realtor is not savvy enough to do this, you may want to get another realtor or check with a title company. And the title company is more, they're more familiar with these fees and they'll be able to help you a little bit better. But at the end of the day, it's best if you do your homework. Add a comment on the video, shoot us an email. I'll put my email in the description, and you'll be able to download this sample sheet with the link used in the description. Israel, do you have any closing thoughts, comments, or questions, or anything that you learned that surprised you?
No, I wish I had done this before a sale, I guess, because it helps walk through everything and kind of take the nerves out. Like the 12,000 is a big one, right? And it's not one that you can really control much because that's more standard. I did have a question on the 4,000 non-allowable. So is this really more focused on repairs that the seller wouldn't be doing? And is that amount normal right now in the seller's market? Like, do you still expect to see something in the seller's market?
So the seller allowances is different than repairs. The seller
Okay.
allowances, it's basically the buyer asking the seller, hey, help me with my closing costs. I've got my down
Okay.
payment, I've got my closing costs, which again, we've talked in other videos. It's a lot of money. Help me out.
Mhm.
I'll give you what you want as far as price, or I'll even increase the price, but help me with my closing costs. That's what it is.
Okay.
Repairs is a
Okay.
little bit separate. Maybe there's a ton of repairs and then you renegotiate and say, hey, I'll do the repairs for you, or I'll give you an allowance for the repairs, but I'm no longer going to help you on your closing costs. It just kind of
Okay.
depends on the negotiation. And then what was
Yep.
your follow-up question? Oh, in the seller's market.
Yeah.
So in a seller's market, you're not seeing a lot of this right now.
Yep.
Usually this would be eliminated. Usually the buyer would just, bite the bullet and pay for their own closing costs. But again, everything's negotiable. Depends on the house, depends on the price, depends on how many offers. Usually if there's more than one offer, closing cost contribution to the buyer is usually out of the question.
Perfect. Awesome. Thank you, Rafael.
Alrighty, gents. Well, thank you. Thank you so much. You all have a great rest of your week, and feel free to share if you like it. Thank you.
Thanks.